When, not if, when the day comes that a sustained bear market transpires, you're going to see that exacerbate. That's going to increase because when when a population is accustomed to a certain way things go and things stop going that way, there is resistance and a little bit of anger involved. We begin with a spider, which is a snooze fest. What have we got here? Like 6 days of nothing. Bang, diddy, bang, diddy, bang, 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 just hanging out in that zone. Really nothing pulling it this way or that. This is why charting is so valuable at a time like this, because you're not tethered to the likes of the spider, which is a snooze fest. There are other opportunities out there beneath the surface as this headline kind of index or ETF gets propped up. Here's the TLT. This is interesting. Down hard on this one. Bonds reversing away finally from that resistance level. And, as we look toward the end of last year, there was a virtual pledge that there would be just a waterfall of interest rate cuts coming. How many will there be? 5, 6, 7, 8? How many hundreds of basis points will it go down? Well, there've been 0 so far, and we're just about at the midpoint of the year. Maybe for political purposes, they'll throw out just 25 basis point cut, just to make the old man happy. I don't know. Maybe not even that. Interest rates, I think, could shock people with the direction they're going, because the notion that they'll be heading back to a ZERP kind of environment is preposterous. We're tiptoeing back toward that direction as bonds weaken away because they've been in a rally for many weeks now. But that red resistance line has held, and that'll be important. We can see that reflected also with the ZB here, a little bit of a different illustration where we approached this former lower high, did not beat it, and it's turning away from there. The most important company on the planet, Nvidia, is turning red again, and this is going just pitch perfect. We had reached support almost that midline. We reached it on Monday, got strength yesterday. Everyone ran around saying, whew, glad that's over. We endured the 3-hour bear market for Nvidia, and it's all going to be peaches and cream now. And it seems a little tired already. Watch this midline. If this midline breaks, it's quite the big deal. I've been emphatic that there have been dips before, sometimes even sustained ones. I mean, there was a time here that Nvidia just kind of meandered around for months. I know it seems impossible to believe, but months. It just kind of grinded away before moving to lifetime highs. So, these are short-term moves, but the next sort of sea change would be if that midline was cracked. SMH down also, reflecting that Nvidia weakness. We're beneath this channel. It's already more broken than Nvidia is because it's got responsibilities beyond just one stock. And so what we'd like to see, of course, is for us to sink back down toward that green horizontal line. After the close, I guess one of the few notable earning events is going to be Micron. No opinion, no position. It's certainly a very strong stock on a multi-year basis. Goes without saying that if for some crazy reason it falls hard after hours, that would just throw fire onto the Nvidia / SMH, throw gas on the fire. No predictions at all on this. I have no strong feelings, not even weak feelings about it, about Micron. It certainly merits watching, considering how important the semiconductor sector is to the market as a whole. Earnings last night was very beneficial for FedEx. Here's FDX. And it is up very strong, especially for such a big stock, about 15%, right near lifetime highs. There's the prior peak, right, like so, getting very, very close to it. It has sustained all that positive momentum. Just, as you can see, long-term, a tremendous security and helping buoy things up for the day. And also up strongly is Rivian. But let's slow down a minute on this. Now, I've said almost nothing but good things about Rivian as a company, as it pertains to their products. I've never driven one, never even taken a really close look, but everyone I've seen looks really sharp, and they seem to be one of the tiny, tiny quantity, maybe the only one besides Tesla in the EV space, which has been doing well. Otherwise, it's been like fraud and bankruptcies. Rivian seems to be here for the long haul. Besides the earnings last night, there was a big announcement about Volkswagen making a multi-billion dollar partnership with them. The interesting thing about it is, with all that good news, There was also an enormous short position. I think something like 15% of the shares are sold short. And so last night it was up, I think, over 50%. That's been fading all day pretty hard, as you can see. The high for the day was up about 17. We're down to 14 and change now. So it's just been a strong fade all day long. Looking at this long-term chart, nothing's really changed. I mean, there have been big pops before. Like take this one, for example. Didn't change a thing long-term. It rallied for a few weeks and then just sort of sputtered lower. My hunch now is that if it bangs its way back down to this price gap, it could be a pretty appealing buy at that point. I'm kind of shocked it's doing as, not really poorly, but like not as fantastic as you might expect given that huge short interest. But yeah, I imagine people last night were expecting more than the gains they're seeing now. 20% is nothing to sneeze at, but it's a small fraction, less than half of what it was doing last night. Maybe in sympathy, I'm not sure, but Tesla is enjoying some gains too today, up almost 5%. In this instance, though, resistance exceptionally strong at that thick black line. You see that Fibonacci somewhere a little north of $200. I think if Tesla got anywhere above 200, it would be a sell at that point. It seems to have certainly established some security here, some base for itself. It's a very range-bound stock now. But I suspect that those strong Rivian winds are helping to blow the Tesla sailboat too. Gold is weak. GLD is down about 1%. The risk of being ridiculously repetitious, I'll just say again, I'm looking for gold itself to get down to 2,100 and something per ounce before it gets appealing again on the long side. What I would love to see is a failure of the support level. It's not really a head and shoulders yet, but that's about as close as I can imagine if we're going to give a name to it. So 210.71 would be a very important failure point for GLD, and that really would open up the door to a fall into this white zone here, getting back toward very heavy level of support down here where this line is. This is nothing. This is just wispy free fall. So just to be very clear here, I would love to see gold have a fantastic future in the months and years ahead, but shorter term, I would love even more if it got cheaper, because it's still pretty pricey right now. And you can see this differently by way of GC. You can see this extremely long-term saucer. You might even call it a cup with handle pattern and a prospective break of this level, which we were looking at GLD just now, but 2277 would be the price on the continuous contract we'd want to see fail. This is my champ right here. This is DraftKings. The options on this up about 68%. I have trimmed back profits. I've taken some profits on that, holding on to about 60% of the position just to see if we do any better. This has a bit of interesting history for me because this was the pattern I was watching. We had failed. It started pushing up. I don't remember the exact day, but somewhere around here, I took a bearish position on it. It did not work out. The strength continued, and I got out at a small loss, and it got up to here. And even though it was not nearly as clean as a pattern as it was back in these days, I give it another shot, and that's worked out well. So we've had several good, strong down days here, and longer term, this is a very good-looking failed trend line. We'll see if that can throw off some more profits. ITB, I mentioned this one before, love this on the long term. This is a very long-term channel. We're extremely high relative to its past prices and relative to its position within that channel. That's a new one for me too earlier today. NEE you've seen before. This is a major utility like so. A stop loss at this red dashed line. ServiceNow got into this one earlier today. The gap was closed on this one, so it's pushed past the gap. My suggestion here for appropriate stop loss level will be this dashed red line here. This was the most recent lower high, and as long as it doesn't violate that, and these are September puts like most of them are, as long as it doesn't violate that, I'm good with this this position. So yeah, ServiceNow, PE of like 672, I think. Here's the plain old cubes. Still got a relatively small position in this, and not too ambitious on this one. Looking for it to close that price gap up. Starbucks still doing well, tumbling away from that very well formed rounded top. Shopify, forgive me, I conflated these a bit. I think ServiceNow has a PE of like 71 or something like that. And mind you, these trades aren't based on fundamentals anyway. It's not like, well, the cash flow is doing this. No, it's just kind of an anecdote, just a side mention. This is the one I believe that has a PE approaching 700. Weirdly, it's actually been quite strong lately. But yeah, Shopify, another live position. And a few more of these. Schlumberger, SLB, down very nicely today, about 2.5% on SLB, turning away from that red dashed line like so. United, down a bit more. This is a real favorite. This is even though it hasn't produced the highest percentage profits yet, it's probably my favorite of the charts. Very clean pattern on this one. A new low today on an intraday basis since this enormous rally back on April 17, but I'm pretty sure it's going to turn away from that dome in short order. And last one, this was new for me yesterday, and the biggest position quantity-wise, XLE, so far so good, down about 1% on this. You can see here the steady drumbeat of lower highs and lower lows in recent months. So let's close with a couple of odds and ends. I want to say again, the percentage of stocks above their 200-day moving average slowly deteriorating here. We can see here very, very slowly curving down. We want to see a break below this bottom of this saucer, of this rounded top. That would be a big deal. Hasn't happened yet. It'll take maybe a few more weeks for it to potentially do that. And a change of pace here, a couple of Forex charts for you. Japanese yen, exceptionally weak. We've got a new, as far as this data goes, a new high of the US dollar versus the Japanese yen. As you can see, our US dollar is doing amazing against the yen as the yen continues to degrade into nothing. And interestingly, the euro, to my eyes, I'm not a Forex trader myself, but the euro looks very prone to a meaningful bear market of its own in the months ahead if we kind of attribute an analog here to what happened back here. So food for thought for you Forex folks.